Ladies and gentlemen, it is now time for our latest update in our series of trader profiles, and today we're going to focus on Trend Tracker, Craig Rapisarda. Now, he takes a very longer-term approach to trading, hitting a lot of home runs, and therefore I'm going to introduce Craig. How are you today, sir?
Good, Jim. How are you doing?
I'm doing well. One of the first things I always had to learn with Craig is don't call him Trend Trader. He is Trend Tracker. Let's make sure we always notice that difference. So anyway, Craig, what we've done is allow you and the other traders to give a little bit about their background and their history, how you got involved into trading, and really the style in which you incorporate as we stand today.
Sure. Well, I started following the market in 2005 when I was still in college, and I was studying finance at the University of Illinois. So I've always kind of just viewed things from like a long-term fundamental perspective. And you know, that was an issue early on because I learned that you can't ignore the technicals. So I slowly worked technical analysis into my approach over the years.
Well, it seems like it has paid off, and you took, kind of a slower route into the trading team as you jumped on in 2016. But then you've really been able to pinpoint some really good ideas along the way, and not only finding fundamental, but really incorporating those technicals, implying growth and value. So give us a snapshot of how you look at things. How do you come up with ideas?
I see a lot of information, obviously, working here, looking at a lot of earnings reports, and I think connecting it to things that I observe and going on in the real world is what really kind of, you can see something on a chart or you can read a press release, but I guess it can resonate with you more if you can see the examples of it playing out in the real world. I guess it can kind of confirm your bias, and you can develop a lot more conviction if it's more than just, I don't know, a press release or some financial statements that kind of look, and you can kind of apply it to the real world, if that makes sense.
Yeah, it sure does, and that is it really does imply your name, Trend Tracker. So you're identifying different trends out there and then seeing how you can take advantage of them in the marketplace.
Yes. Exactly. So this next slide is kind of how I think pretty much anybody who's ever tried to invest in a stock has kind of used this sort of description that I kind of go after here. Basically, you want to buy something when it's on sale, right? So if there's something you like and it's out of favor, it usually sets, generally speaking, you want to buy something when it's out of favor. So maybe it is a growth stock, but you're getting good value for it. So, identifying trends and waiting for good spots, and being able to take advantage of how the market can be very short-term focused, or, go from, as we've seen recently, being obsessed with the trade uncertainty or the impending recession, and all of a sudden, a couple data points come out and, we're not worried about that at all. So, obviously, stocks can pull back for company-specific reasons that maybe aren't a big deal, or just along with the broader market, and basically using those pullbacks to get into stocks that you've been waiting for and just being patient.
All right, now you do highlight patience as part of your attack, but you also get in on a kind of scale-in approach. So you dabble in it a little bit at a time, and then you up how you up your position as you get more and more confidence in either the idea or the actual price action? Does one outweigh the other?
You know, I think the most important thing is to be able to combine the fundamental story with the chart. If you can make sense of the mood, and if you have a good feel for the sentiment, so there's not only the fundamental side, but the technical side, and also kind of the sentiment side of it. That's when you can really, when you realize you really know a stock well, is when you can develop some more confidence and really start to load up if everything aligns. But again, it takes patience. Patience and discipline.
Okay, and I am just curious if there is anything that takes precedent, if one over the other. For instance, do you come up with an idea based on something that's happening in the sector or in a stock specific thing, or do you look to see what the trend is outside of the market and then focus in on what's going on? Which one comes first, the chicken or the egg question here?
It's definitely the first thing. I start from a bottoms up perspective, so we'll get into some prior examples a little later, but like something like Match, when IAC spun it out, I knew that it was going to be a very valuable asset, whether or not the market was appreciating it yet. Of course, the company had to execute, and it took some time. And a lot of my high conviction ones, that you gotta, as long as the fundamental secular growth trend is intact for a specific business or within a specific industry, that's the most important thing. And then broader market impacts and what the stock does on a day-to-day basis can be your opportunity to get in or out, if that makes sense.
Yes, it does. And again, you highlight patience as a big virtue in your overall strategy, and you already highlighted Match.com as one of the ones, but why don't you give the listeners a little bit of idea of some of the other names that you've really been patient on that have turned out to be really big winners?
Okay, I think we're one behind I'm looking at one behind, I think. Okay, yeah. So, do you mind going back one slide, Jim? Sorry,
Yeah, no problem.
Sorry. To the one that says finding value and growth. Sorry,
yeah, I'm on that one.
Oh, okay. I guess there's a delay on that feed. Okay, so yeah, you start with a big picture, long-term fundamental bias, and kind of keying off of what Brett was talking about last week. Now he looks for big trades in the futures markets, looking at broader the futures markets and macroeconomics, and I'm kind of just looking at stock-specific stuff. So. What he calls elephant hunting is kind of what I do on a stock-specific basis. So I'm looking for very high-quality businesses, high-quality stocks, and one of the most important things is are they going to be growing earnings over the long term? Is this thing really worth owning? And they most often come in the technology, consumer, and healthcare sectors. I tend to avoid things like commodities or something where it's hard for me to develop an edge. So again, just connecting fundamentals, technicals, and sentiment so that you can have a really good feel for it, so that you can develop the confidence and conviction to really load up on something. So sorry, I was a little behind there, but now I'm ready for the examples.
Yeah, and I think it's a good reminder to everybody that you stick within your wheelhouse. You don't go outside of your scope of what you feel most comfortable with. You're investing in ideas that you understand and don't really venture out. Therefore, you establish your edge accordingly and able to capitalize on that. So, yeah, so moving right along to some of the ideas and implementing that patience practice, we can talk about, you can reiterate Match.com, or we can move right on to Canada Goose, because that was a really great one as well.
Yeah, Match, I think at this point everybody is pretty familiar with it. But when they first got spun out, it was just a layup to me. I knew I could just buy it and sit on it, and again, management executed really well. So they ended up monetizing Tinder really, really well, and so that's what really kind of lit a fire under the stock. But I didn't have great patience with this one. I sold too much too soon. But you just got to keep learning from that. If nothing, it's hard to watch these things every day and not, you're very tempted to sell when you're watching it every day. But if the story still checks out and everything still looks good and you can remain a patient long-term investor, it's worth letting your winners run, as Scott Bluex taught me. So Goose was another one where I bought it on the day of the IPO, and it was just another layup. High growth luxury retail is a very scarce asset in the public markets. So as long as the growth story isn't like waning, which it wasn't at the time when they came public, was it 2 or 3 years ago? So this was another one that was fairly easy, not a very stressful long, where you could just kind of buy and hold.
For sure. And I'll tell you what, Craig, you definitely practice what you preach, because you learned a pretty valuable lesson as far as patience, and that being in TTD. That was one that you were involved in the $50 range, and it went all the way up to almost 300, and you were in it for a big bulk of that big move. So patience definitely paid off. What got you excited about the idea in the first place?
It was the same thing as Shopify when they first came out, and their first earnings report, they come out and they're just reporting like explosive growth, and it's become more commonplace nowadays with some of these like really hot enterprise software companies, but so the trade desk wasn't really getting rewarded with, it wasn't really getting the respect that it should have for the first year or so, because it was ad tech, and the assumption was that Facebook and Google were just gonna kill them. But essentially, I see these really impressive earnings reports. I kind of dig into it more, trying to understand the story a little bit better. In this case, there was a good year or so where my conviction kept growing. The stock looked increasingly mispriced. Similar software companies with higher growth were trading at 2 times the revenue multiple. This thing was trading at like 5 times sales in early 2018. And again, it was based on the notion that there hadn't been a successful ad tech company over the last 10 years. They've all gotten killed by Facebook and Google, and this one was doing everything the right way. They're an independent leader in their niche specific field of advertising, programmatic, using data, which is where the whole industry is going. So I just get lucky because I'm looking at all this stuff every day. I'm able to pick up on some of these things early enough. And like I had mentioned before, you want to get in before it becomes a momentum stock, because that's when it really takes off. So this is another one where I was just early and patient, and for my favorite stocks, I'll become like obsessed with them. And I don't know if people that were following me back in late 2017, early 2018, I was obsessed with this stock. I was writing about it pretty much every day, just because it was so compelling, and I mean, I was like consumed by it. And MongoDB was another one that was kind of just sort of a layup. It was a really attractive story, and if it had come public two years later, it would have, if it would have came public this summer, it would have opened at 30 times sales, and this was kind of before all the valuations kind of got out of hand. So this was another pretty low stress buy and hold that worked out.
All right, and you continue to hold both these, a little bit of TTD and MongoDB as well.
Yeah, so the trade desk is still my biggest position, and it's back to the point now where it's probably, I kind of like it again. I mean, it's still my biggest position, so I'm not adding here, but it's not necessarily a bad place to get involved. It's the cheapest the stock has been since February. I expect another solid beat and raise. I was looking at it over the weekend, and even though valuations have come down quite a bit, I wouldn't be surprised. They're usually pretty cautious with their Q4 guidance, but I think it'll still be above consensus. Now, in a perfect world, for whatever reason the market doesn't like it, and if we could buy this stock below 180 down to 150, I think that would be a gift going into the Q4 report in mid-February, because again, they're going to be able to guide up the next year, and the Q4 is the big quarter for all these advertising companies. So there could be some caution next week when they report. Just conservatism, I guess I would say, not necessarily caution. But yeah, I mean, I've learned that I need to just remain focused on these stocks, and re-enter and trim and trail, because something like Match, I kind of sold it too early. I kind of stopped following it as closely, and I just need to stay on them because I know I should kind of just stick to what I know best,
Absolutely. So let's talk about a couple ideas that are really underway right now. You've been getting involved in the TLRA all year. You provide a lot of good commentary on this one. So what do you like about it?
Yeah, so this is sort of like a little baby, the trade desk TTD. TLRA is a little bit lower quality than the trade desk, but it is similarly very well positioned within the ad tech ecosystem as advertising dollars flow into connected TV streaming. So especially now heading into year end, as Disney's launching Disney Plus, and then you're going to see Apple's launching their streaming service. Then you're going to have Warner Brother or AT&T do their HBO Max, and then you're going to have NBC do Peacock. So this streaming trend isn't really a surprise to anyone by now. I think this is the sleeper way to play it. Now, of course, the trade desk is a good way to play it because you can buy ads on connected TV through the trade desk. Roku is another good way to play it. Both of those stocks trade with like a 10 times revenue multiple, 10 plus actually, low double digit, let's call it, revenue multiple. And TLRA is trading at less than 5 times sales. They're partnered with Hulu. Their strictly connected TV business is growing triple digits, and it's approaching 50% of total revenue. So, I mean, the secular trend in this one is just very strong. It's already down 25% from the highs just last month, and they reported strong Q3 results. It kind of took a little rest and then broke out weeks later and went on a nice little run, and then came all the way back just because small cap growth has been very much out of favor as everybody knows. So I do think this one will eventually see new highs, because this connected TV trend is a long-term trend that isn't going to go anywhere. If everything stays the same, this stock should make new highs into the double digits. The not too distant future, I wouldn't think. Now, let's say they lost a certain partner. I mean, they're partnered with Hulu through at least next year, I want to say. So obviously, black swan events or certain things could always happen that could alter your perspective on the company. But as of right now, it seems well positioned for them to continue growing, beating and raising, and it'll start to develop a higher multiple where it was basically a couple months ago. So I think more and more people will start to pick up on this one because of the Roku and Trade Desk performance. So yeah, this one is one that I sort of became a little obsessed with this summer, and I'm sure some of the subs have noticed I've been talking about this one for a while. So I've just kind of been scaling in all year.
All right, and if anyone didn't own it already, below this $8 level is a good entry point?
Yeah, I think so. I started, this graph on here is pretty small, but there's that big gap up when they reported Q4 results in March. So that was, I think, right around 5 is when I first started scaling in. And yeah, I've just been kind of I thought that $8 level was kind of a line in the sand, and then after the third quarter report, it did kind of break out above it, and then it came right back down. So yeah, I think this is a good buying opportunity. I bought it was it 2 weeks ago when it was kind of in that little narrow range there, in between 7 and 750. But I think I bought it August, September, and October. Just keep accumulating it. So yeah, this is one of my favorite stocks right now.
All right, now I know another one of your favorites is AIMT. I know that because you talk about it throughout the office every day. So tell us about this peanut allergy drug.
Yeah, so this is probably the one that I've been most obsessed with this year, because it's just been so compelling. This is a case where the market, there's a lot of shorts involved for many different reasons. The fact that it's just a bunch of peanut flour, the fact that it's not a cure, none of that really matters. Peanut allergies basically become an epidemic, and this is going to be the first FDA-approved therapy for it. So to desensitize kids so that they don't have to live in fear. It doesn't cure them, but it will it can dramatically increase the quality of life for kids that know that they don't have to risk, dropping to the floor if there's random traces of peanuts. I doubled down in June. There's other reasons why it's been weak too. They basically decided they're going to commercialize on their own, and it's a very risky endeavor for a biotech to not partner up with a larger biopharma firm to do all the marketing and do all the tricky stuff. But Immune brought in a commercialization veteran who worked with Ultragenyx, Genentech, Novartis, Pfizer. Basically, he's a commercialization veteran. That was last summer, and I basically doubled down in June, knowing that we had these positive catalysts on the horizon, the September AdCom, and now the PDUFA, which is basically the decision deadline from the FDA. It's a foregone conclusion that it gets approved at this point, again, barring some kind of black swan event. And the expectations for the launch, I've included on the slides here. Q1, 3 million, Q2, 9 million, Q3, 15 million seems very low. So these low expectations combined with the high short interest, people thinking that it's going to just be a total flop, which I just think it's very, very myopic, because has blockbuster potential, and which is basically it's projected to do $1 billion in sales, and at $20, the enterprise value is about $1 billion. So you can, if it gets onto that path towards $1 billion, that's going to be a 4 or 5 bagger on the way within a year or two, if we have a strong launch. So this is just a really compelling opportunity, in my opinion. And you can see now it gapped up on the positive AdCom. It came right back down. Some people asked, so where should I buy it? And I had highlighted 22. It was where the 50 and 200 weekly moving averages were converging, and it kind of came back below there, 22, and it's just gone straight up ever since. Yeah, I mean, it could be a double from here with a positive launch next year. So this is one of my favorite stocks heading into 2020, as I've mentioned many times on the site already.
All right. Well, you just don't stop at a couple of ideas. You have a few others that are already up your sleeve and in progress. You've been pretty active in a few other names like LYFT and Spotify. Talk about these just real quick.
Sure. LYFT I've been wrong on, but I called the bottom a couple weeks ago. Basically what management said last week, saying they could be profitable by the fourth quarter of 2021, is something that some sell-side analysts had already been saying. This thing has just gotten beaten down, along with this this valuation correction we've seen with this disdain for not unprofitable companies, but the fact that they weren't ever going to be profitable, or the idea that they were never going to be profitable was kind of silly to me. This is a huge market. I still like this one a lot. Pluralsight is one that should be able to bounce back. They're both Wednesday afternoon. Pluralsight fell like almost 50% last quarter, and now it's finally at a very reasonable valuation, and they hired a new chief revenue officer from Salesforce. They should be able to get things figured out. I think it should be able to get back into the low to mid 20s in the not too distant future. Spotify, I actually bought a couple weeks ago, reported a strong quarter this morning. They bounced back with their premium subs like they said they would. So that was a good one. I'm actually back in the money on that one as of this morning. I think I'm pretty close to cost now after adding a couple weeks ago. And I bought Pinterest last week into the print. They do have a nice little niche carved out in the ad market. And I also bought Elastic recently, which is more of a IT infrastructure developer, similar to like a MongoDB, but it's not a cheap stock. But if it keeps selling off based on the fact that it's not cheap, I'll keep trying to take advantage of that, because I think it's a really, really valuable asset long term.
All right, Craig. Now, one of the things that you do very well is keep our listeners and those on the in-play page very well updated on what's going on in these stocks, almost on a daily basis, and I'm sure that everyone out there appreciates that. So I just want to say, Craig, keep up the good work. Keep finding those good ideas, and we'll look forward to talking to you about some of these ideas in the near future. You do a great job at the earnings coverage as well. So, man, just keep finding those good ones, man.
I appreciate it, Jim. I'm going to try.
All right. Thank you so much, Craig.